Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 31st at about noon Eastern. And before we go on, please know that all of us at ToniTurner.com and the market now wish all of you and your loved ones an absolutely wonderful 2022. And now on to the market. Reuters today said that profit growth for U.S. corporations is expected to slow next year after a gangbuster 2021 with rising inflation and a rapidly spreading COVID-19 variant adding to uncertainty as investors try to justify stock prices trading near their record highs. And on that note, let's go on to three charts that could give us a little insight into the week to come. Okay, as we always do, we're going to first look at a daily chart of the S&P 500 SPDR, its symbol SPY. This is the ETF that closely follows our benchmark S&P 500 index. Now, the SPY's last all-time closing high is important, took place on December 27th, and actually that was this past Monday. And it closed at $477.26, which is about 4,772 on the S&P 500 itself. Now, when I captured this chart today, the SPY was trading at $475.09. Now, as you can see, this is this candle right up here, and you say, well, Toni, what's that line going down here? What does that mean? That means we're coming into the end of the year, and right here, this is January, so we're coming into the end of the year, and they always put this line on these charts so you know where it is. So at any rate, again, we're trading at $475.09, trading at a premium to the green line, the 50-day moving average, the red line, the 20-day moving average, coming down a little bit on the day now on low volume as it would coming into the end of the year. That's pretty normal. Now, if we look back, we can see that on December 1st, back here, the SPY fell to 450. It was moving up pretty nicely. It fell down to its 50-day moving average at 450, then rallied back up here very, very nicely, then retested that 450 low, so we can actually draw a short-term support line across, or if I could do it straight, across under these two lows. So that signifies that that's now a pretty important number here, down around 450. And we can see that before that, I easily drew a trend line coming up under the September lows, moving up under this 450. Coming in the first part of December, then the middle of December, and then moving higher. So the SPY has been rallying since then, back down again to 450, rallying back up to a higher high. And that's always a good thing. So now we can see where we can stretch two trend lines, the lower line and the channel line above, coming up to the top, saying, okay, this is what we would like for the SPY to continue doing, moving up in higher lows and higher highs. Most certainly, that's the definition of an uptrend. What I do want you to look at here, though, is something that may not always catch your eye, but if you back up and look at this chart with a longer-term view, you'll notice there are areas here where the candles, instead of being orderly like they were in October and before that, instead of the candles being small and orderly, which means market traders agree on which way the market should go, not too many sellers, more buyers than sellers, price moving higher. But then you see how they start duking it out here around the end of November, first part of December. Then it rallies up and prices open low and close high, or open high and close low, which means the bears and bulls are duking it out, and we got to see who wins here. So if it becomes disorderly again in a manner, in a fashion like this, we'll have to see if it will hold in this channel here that we drew, right up around 460 or so, and then we have I'm looking for the resistance here at about 479. We needed to keep moving in this channel to remain healthy. So we do have resistance here at 479. We do have potential support at the 20 and 50-day moving averages at 467 about and 464 about. Of course, again, we have this low at 450, and we have a little bit of support here. We could say potential support right here coming in at this trend line, which is down around 460 or so. So quite a bit of potential support here should the SPY need it. Now look, think about this. January is seasonally a positive month. Usually November, December, January are positive. Usually that's the way it goes. But remember, and the market's action in January, whether it closes high or closes low, the market action in January is generally used as a predictive measure for the upcoming year. So it's going to be really interesting to see how the market acts in the coming week. Before you head in and load the truck up with stocks, please do keep an eye on where price is relative to the 20, 50-day moving average and down as we get to these lower support areas. So just be mindful and be wise. Our next chart today is a chart of the Invesco QQQ, symbol QQQ. As you all know, this ETF represents the Nasdaq 100, a major index in the market, a major leading index, with top holdings including Apple, Amazon, Microsoft, Alphabet, Facebook, that whole group. Now, the QQQ made its all-time closing high back here on November 19th at $403.99. And when I captured the chart today, this chart, the Qs were trading at $398.49, down a little bit. Still, the Qs, or the cubes as we call them sometimes, they are trading, it is, I should say, trading above the 50-day moving average, which is coming in at 392 and change, and the 20-day moving average that is coming in at 393 and change. We have resistance now up here at 408 and up here at 409, but note with me that the candles here are getting wider and wider, many of them, wider and wider. The bulls and bears are duking it out here, deciding which way the techs are going to go, momentum stocks are going to go in the upcoming month here. So you see how they're orderly back here, orderly meaning lower price ranges during the day, more orderly patterns. Then when it starts getting wide candles and jumbled, even though you can see a kind of a double bottom here, this means again that traders are disagreeing as to where the market should go next. So we want to keep an eye on the QQQ. Again, we do have potential support here at 393, 392, very definitely potential support. More potential support down here at about 379, 378, where these lows came in. So please also keep an eye on the QQQ, be a very important index to watch in the coming week and especially in the month of January. We want it to stay above the 50-day moving average to be really bullish and definitely above this 378 line as well. Our final chart today is a daily chart of the Global X Robotics and Artificial Intelligence ETF. Now you say, gosh, Toni, those are great big candles. Well, they are, but if you look, there is a pattern here, and the price on this chart, after all, down here is 34.50, and up here is just like 40. So it's the way this trades because of the nature of the beast, and it does have low volume. So you kind of have to back up and look at this in a bigger picture. Global X Robotics and AI has 37 holdings. Top holdings include NVIDIA, Keyence, Intuitive Surgical, Upstart Holdings, and AB Limited. This is an international ETF. Now, the BOTZ made a brand new all-time closing high on November 4th at about $40. And from there, it tumbled down to 34. If we look left on the chart a little bit, we'll see that it came up from its lows back in July and August, back here, July and August, it came up from its lows here at about 34.50, up to about 38 on this move, then back down to 34. So you see how it came down to the 200-day moving average, then rallied back up and made a higher high, then fell back down and stayed below the 200-day moving average for just a few days, down to this 34.50 line again, then rallied back up. Now, again, the one reason this is a little bit disorderly, and it is, and I usually like orderly ETFs, is because it does have low volume. If volume starts up again, I think it will become more orderly like it was more in July and August. And orderly is what we want. So at any rate, if you want to look at this, just trade it conservatively until we see where it's going. Now, right now, the BOTZ is trading at $36.13, just above its 20-day moving average, with its 50-day moving average overhead and the 200-day moving average just below. It looks like from this chart that well, I can't draw a straight line. It looks like the BOTZ has the ability to hold at about 34.50 each and every time. It does have prior support going back also into June and July at this level. So that's why I'm looking at this as potential support. So if in the next week the BOTZ can stay above the 200-day moving average, the 200-day moving average is coming in here right now at $35.55. Again, the BOTZ is trading at 36.13. So if in the coming week the market is positive, I want it to be positive, and if in the coming week the BOTZ can stay above 35.55 or the 200-day moving average, I may buy a small position, and my initial stop is going to be down here at $34.25. Now, I put this red rectangle here as I usually do to indicate stops, but if you want to make it a tighter stop, you can certainly put it below the 200-day moving average, again, which is trading up here at 35.55. So maybe you put it at 35.40 if you'd like to be a lot more conservative with your stop. That's okay, too. Now, when and if the BOTZ rises above the 50-day moving average, and I really want it to close above it, and again, that's coming in now at $37. So if BOTZ can get above this $37 line and close above it, I will add more shares to my position. And of course, by then, I will have a trailing stop. So you may want to keep an eye on the BOTZ in the coming week. And now, please know that this is the perfect time right before the year begins to check out my online training programs and make sure you are ready to start trading in the new year. My programs include our flagship training, 7 Steps to Successful Trading, how to swing trade successfully, how to trade the trend to profits, plus 3 winning setups, bottom fishing, and many, many more. These programs can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen, or even more simply, click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and I wish all of you a very healthy and prosperous 2022.